Hey, we're live. March 21st, Deribit live. You're here with Rogue Traders. March 21st, spring equinox. Or it's the 22nd. It always changes. I don't know. It's funny because in the Western world, spring was always on the spring equinox. But in a lot of the Eastern world, they say March 1st. They just say beginning of the month, but we I don't know, just different cultures, I guess. What did you do?
Where are you going with this?
I'm not going anywhere with it. I'm just happy it's the first day of spring. Now, some people say, no, the first day of spring was 3 weeks ago, man. I guess, yeah. Anyways, we've got a lot to talk about today. We've got a lot going on. We had some drama over the last, 4 or 5 days. Big move, 15%. 15% off all-time highs. No joke. If you're new to crypto, just another day in the office. But or if you're used to crypto, but if you're new, it's probably pretty hair-raising. Got lots of interesting stuff today. I think today we're going to talk about. Actually, here, let me bring up the slides.
I actually did receive a Telegram call from an investment manager I know who owns Bitcoin for the first time. Very keen to ask me my view on what was happening with the price. I yawned. I just said, look, just close your eyes. It's Bitcoin.
Just close your eyes and hold on for the ride. Yeah. All right. So what have we got going on today? The agenda is we're going to look at the current market. Some interesting things to look at on the charts. I hope you enjoy that. We're going to do a little bit of live trading. Actually, we're probably not going to really do much live trading because on this particular account, there's not much to do. But we'll show you what we did a few days ago, what we're planning to do, what the account looks like. Again, this is the synthetic miner account. Doesn't require a lot of tinkering. And in fact, it's practically stress-free compared to the other accounts we manage. So I'm glad we're showing you guys that. We're going to talk a little bit about adjusting short in the money puts because I think it's very relevant. If you were selling puts to, you want to accumulate Bitcoin, if the market's going up, selling puts is a smart thing to do. We do it all the time. Then you get a 15% retracement and you're like, oh my gosh, what the heck's going on here? And how do I deal with this? Well, there's different ways to deal with it depending on your bias and the type of trader you're. Also talk a little bit about that. Well, if we have some time, we're going to look at the new order interface functionality with futures, which is kind of cool. And then a short Q&A section at the end. So without further ado, let me stop this and let's pop over to some charts. Ooh, where are we here? Charts. There we are. Now I assume everyone can see that. Good old Ethereum. I've got big expectations. I got big hopes for Ethereum. We had a big move up, big move down. It's a pretty basic chart. It's not as intricate as Bitcoin's. But again, we haven't been trading ETH as much. We just found that we just weren't getting the same returns as we were on Bitcoin. Now, let's take a look at the big dog, Bitcoin. This is cool. This is very interesting because, we had this ascending wedge. We talked about that last week. It was starting to break. And I said, look, only 60% of the time that's going to break in the down. This time it did. Every person in the world was long. We knew there was going to be a pullback at some time. It could have went up to 100K and then pulled back. I don't know, right? Who knows, right? So it wasn't all that unexpected. And if we look from tip to tail, we got there, 15, 16, 17%. That's nothing in the world of Bitcoin. In the world of Bitcoin, it has a 10% move on average every 90 days, just normal course, never mind halvings and ETFs and all the other stuff going on, right? So what I found interesting here is when this is coming down, we were getting, the odd message, panicking, and even one from Richard or two. It's like, oh my God, where's this thing going to? And I said, well, you know what? This EMA here, this is the 100 EMA on a 4-hour chart. I said, look, I think it's going to cling to it. If it wicks down, I think it might come back up. But if it wicks down, stays down, we're probably bouncing off 200. Sure enough, 200. And coincidentally, just out of pure coincidence, it happened just to hit the bottom of this range, which is the previous resistance, which now supports. So technical analysis, you don't want to lean on it. 100%, unless that's your job. But it does help provide clues and a little bit of light in the dark, and give you a bit of confidence to make certain moves. What are you going to say? What are you going to say to disparage this?
No, I was going to say, actually, I did notice during the whole sell-off that you had this sort of air of calm about you, because you had this sort of inner peace that your EMAs were all in line.
Yeah. Thank you very much, Richard. I was expecting some. Well, I was expecting something else. So thank you very much. So so that, and you can look in hindsight and say, okay, yeah, well, that worked. Well, when it was plunging down here, it looked pretty damn scary, didn't it? But that would have given me confidence to maybe sell put spreads down in this area, thinking that, it might come down through, but it's probably going to be sticky here for a while. Now, the interesting thing is we're right smack in the middle, aren't we? Look at this. We are right smack in the middle between the high and down here. So what do we do when something's right in the middle? Well, obviously, we sell Iron Condors, don't we? That's what I do. You know what? If one side gets tested, okay, we'll just deal with it. We'll roll it. We'll adjust it. We can adjust both sides if we want to. And I think I put on an Iron Condor trade just a couple hours ago, actually. And that's short term. Short term. This isn't 60-day stuff I'm doing. I'm doing stuff short term, because in 60 days we could be at 100K. I still believe that could be true. Richard and I had a chat about this on our daily live stream, which we do every day on Patreon and for our silver members. And we talked about this halving, and previous halvings, they don't really actually do too much during the halving typically. Could this be a quiet April? And maybe this is going to be our range for the next few weeks? Maybe. I'm inclined to think we're probably going to keep pressing up, especially as grayscale outflows probably subside. Who knows? I suspect we might keep going up, but I wouldn't be surprised if this week or maybe over the weekend we went down to low 60s again. It wouldn't shock me in the least. But now we've got a bit of a bottom. We've got this area here. Where's my little box here? We've got this area down here. We've kind of got a little bit to lean on. And of course, we're going to lean on all-time highs, because it's going to take some effort to do that. So I'm happy to play this range for a little while. Maybe it'll play out for 2 or 3 weeks. We'll see. Other than that, I think that's the trade to do. Now, I think that the big...
We're saying if it's... I mean, we're at 75 vol now, and if we do nothing for 2 weeks at 75 vol, there's a lot of premium coming in.
That is a hell of a lot of premium coming in. So... we were even talking today about some of the stuff that we parked longer dated. So we got, some positions were under pressure. We parked them in April, May, June, whatever. And we talk about bringing those forward all the time. Those are still really expensive. If we look at the volatility surface, everybody's convinced it's going up, over the rest of the year. If it doesn't, that volatility is going to rush in, or that crush is going to happen quite quick. So it's interesting. So we don't want to necessarily bring it all forward.
So we've got a few plays on that, haven't we? We've got a couple of 1x3 plays and 1x2 plays. Yeah.
So it's an interesting time. I know for a lot of people, it was a little bit stressful having that pullback. But let's face it, in the big picture, 15% is pretty normal. We ran up so much. It's got to happen. Everyone was over leveraged long. The dealers needed to get inventory back. It's going to happen. So,
once one person cascades, everybody cascades, right? Because every exchange out there is offering 50x leverage, which means that you've only got to get a 2% move, and everyone who's gone balls out is going to get wiped, and then he's going to cause the next layer down to get wiped, and so on, all the way down to people like us who weren't that high leveraged in the end. I think maximum 2x, and even we got under pressure in that sell-off. So yeah, I can't imagine how painful that was for many people who were more highly leveraged.
Well, we got hundreds of millions of liquidations. So
I think over the week it was billions.
Yeah, live by the sword, die by the sword, right? Actually, Richard, why don't you share that synthetic miner account, and we can show people. I think at one point we were up to 27 or 28% or 30% leverage maximum. Normally we're running at around 20. it was really. I don't want to say it's the most stress-free trading ever, but it's certainly the most stress-free account we manage.
Yeah, so this is our synthetic mining account that we're running purely for this channel, and I think we felt a little bit uncomfortable about some of our puts that started to get in the money, and they're always going on a 15% move down. It's going to get in the money. So rather than just hold the line and sit there in the money, we decided to roll some things out and down. So at the moment, what you can see here is the full extent of that's what we've been through since we started this trading account. We've been through that spike and wick. We've been through that run up, that wick down. We've been through that wick, that wick, that wick, that wick, all these massive wicks and this huge sell off plus the bounce. If this had been any better the market than Bitcoin, I think people would have been fleeing it in droves. It's terrifying. Anyway, we've actually got through all of this. Actually, our equity is still up. Our starting equity was 0.0825, and our equity is now 0.0835. And our cash on account, I've got the spreadsheet. I should show you the spreadsheet. The cash balance is 0.0907. So putting that into perspective, with our little Hong Kong book of spreadsheets. So the BTC cash.
Can you make it a little bit bigger?
Sorry, yeah. Zoom. How do I zoom? Control plus.
It's on the left side of the toolbar there. You can just see the 100% right there at the left, a little bit more left.
There, yeah.
Yep.
150. There we are. So the important numbers here are BTC cash because we're looking to accumulate BTC. So BTC cash is up 0.008 since the start. The equity is roughly the same. So we're running mark-to-market losses on some of our positions, but that's okay. And then in USD terms, the cash is up $800, even with that big sell-off. And the US equity is still up. So after 21 days, BTC return, so it's 0.5% return on our BTC, 7% in terms of dollars. Had you hodled, you'd have had nothing. So we're still doing better than hodling, and we're doing better than hodling in USD terms. And annualizing that out, our spectacular 580% annualized is now down to less spectacular 10%. But watch this space. I think that'll come back. And our super mega 48,000 US dollar return annualized is down to a mere 230% return. Bear in mind that Citadel, the most successful, biggest hedge fund in the world, aims for 25%. So if you're doing this, you're already beating them. So that's that. I think in terms of the positions, because it's important to have some context here, right? So this 22nd got bought back this morning, didn't it? I think we heard the ding go off.
Early in the morning.
The order was in there, so there was a position here, got bought back at 10 bips. We've rolled some stuff from 29th of March out to April. I think we might have rolled it from 5th of April to end of April, just to get it deep out of the money. So we've pushed these positions premium neutral right down into the money in April. And our view is that, that will take some time to decay if we're just relying on decay. But actually, if you look at, say, 2 weeks' time, the 56,000 puts currently 235. In 2 weeks' time, 56,000 is going to be 125. So they halve in value. And then in another week's time, 56, they'll be almost time to, they'll be in a position to shove them right back up at 1 week. In fact, they will be 1 week expiry at that point. We won't be worrying about that. We'll be selling more. So I think it looks like a daunting, amount of time, but actually it'll pass pretty quickly. And in the meantime, today, I think this morning we put on a new put spread to replace the put that got bought back overnight. We just sold the 64.60 spread. Again, because there's 3 days to expiry, and we just wanted 30 basis points over 3 days, 10 basis points a day. In actual fact, we pulled in more like 40 or 50 basis points, haven't we? And that, it was. I think it was 50 when we sold it, because we thought, well, if we're going to buy back the short leg at 10, and in fact I should put the order in now, just in case. Then that gives us a 10 basis point buffer, which means if we have to roll it, it's going to cover the costs and so on. So all good there. And this account only has to make reduce limit, create order. This account only has to make 10 basis points a day to increase the account value by the number of Bitcoin by 50% per year, which is more than enough, because Bitcoin, according to Michael Saylor, in 2030, Bitcoin is going to be worth $4.7 million. Kathy Wood thinks it's $1 million. We think she's an idiot, and Michael Saylor is far more believable. So we're going for the $4 million mark.
Great. So the slander lawsuits should be in anytime.
No, I didn't say she is an idiot. I said we think she's an idiot. So it's an opinion, not a statement of fact.
Fair enough.
And that would mean that this account in 2030 would be worth $10 million. If we just do this, right? Just that one stupid contract every 3 days.
Fair enough.
So that's how easy it is in a rising market.
Yeah, and we can see here that we're not really doing a lot. We've got space with everything. Yeah, if the market takes another 10% move down, well, we'll have to adjust some things. But it's kind of easy to lean on this strategy right now, because this strategy implies that we have a bullish sentiment. That's what, if we thought for a minute that Bitcoin, we're probably going back down to 20K, this would not be our strategy. We're doing this because we want to lean on this.
Yeah, if I thought that, I'd be trading gold, only gold. I'm well known for liking gold, and at the moment I like Bitcoin. And if I didn't think Bitcoin was going to out accelerate gold in the medium term, then I wouldn't bother.
You're basically our version of gold member. Yes. So we don't have a lot of time here. So let's just quickly, actually, before we do anything, I did put a quick poll up. Check out the poll. Will Bitcoin see new highs by the end of March? Yes or no? Richard, if you just want to take a quick look at that order entry box, let's cover that for futures, and then let's jump into talking about managing those in the money short puts.
Yeah. Okay. So in case you haven't noticed out there, Deribit have done some great work on their UI. And in fact, there must have been some back end work as well. I know this very well because I build exchanges, or used to, and I put an exchange together in the past. I know how hard this is. And so they've added an extra order type, which we in the business call one cancels other. And that means that you can go in and put a limit order in. So in this case, you can go pay, 67,500. 67,6 order for 0.1 of a Bitcoin. And you can then say, actually, you know what? I'm happy to take profit at 68,000. And then I want to put a stop loss in at 690. You'd probably get killed doing that, but and then you can go whack buy, and that will actually set up 3 orders in the system for you. First of all, which we call linked orders, or one cancels other orders. So it'll put in the limit order to buy. Once it's bought, it'll engage the take profit and the trigger and the stop loss orders. And if the take profit is triggered, then that will cancel the stop loss. And if the stop loss is triggered, it'll cancel the take profit order. So super nice way to just set up the trade and then go off and play golf or ski or do whatever you've got to do, walk the dog. And just like, hands-free gambling, right?
Or if you're a millennial, you'll go play frisbee golf.
Really?
Like, that's what they do. It's very popular with them.
You think millennials play frisbee golf?
Yeah, they got their neck beards and their frisbee golf. It's very interesting.
I think they play things like Quake and
it's a whole culture. No, right. I'm telling you, I'm more in tune.
Okay.
Okay.
Tapping you're in a millennial.
I'm hip. All right. Hey, so let's talk a little bit about this. So a lot of people felt a lot of pain, and this is no joke. They're in, whether you're long futures, long underlying, long calls, short puts, anything that's a bullish sentiment, you're feeling some pain the last week because we had a 15% move down. So here's the thing: it depends on number one, you got to keep margin free. You got to keep, because if you don't have margin free, you can't make any adjustments. You get hog tied and you might have to dump things. So you might have to sell some futures in order to maintain that position. You might have to buy more puts. You might have to roll some things out. Normally, when we're trading, we're a little bit agnostic in terms of direction. We're like, I don't know, up or down, who knows, right? But this is a unique situation with Bitcoin right now where we're bullish like most people are. So we want to remain long in a market that's falling. It's kind of counterintuitive for me. It's like, why the hell am I doing this? Normally I'll just be short. Okay, let's go down for a while. Fine. But you don't want to get ragdolled. So the idea is to ease the pain as much as you can until it turns around. Now that's different from praying and hoping that a position is going to go your way, because that's not a way to trade. This is only because we've got that bullish sentiment. Otherwise, we wouldn't be staying long delta in a declining market.
And just to be clear, I have tried the praying method in the past, and I can assure you that markets punish it severely.
Like we hear your prayer, we're going to double down.
Yeah. Markets are like any other opponent. They can sense your fear. You've got to have none.
So basically, you want to limit the amount of pain. You have to accept your equity is going to fall no matter what. So that's why you can't pay too much of attention, because the underlying asset's going down. All your positions are going to get you. Okay, you have to accept that your equity is going to go down. That's life of a trader. But you also recognize that as it starts to pick it back up, that'll all flow back in. So you just need to protect your positions. For us, if things got at the money or slightly in the money, it depends where on the chart. If we're feeling comfortable, if we think, oh man, this thing could go down to 50K. Well, you know what? We might be dumping some things. We might be rolling some things. We might be looking to get back in aggressively. But there's also times, and what we did was we decided to split some positions. So a third of it, we kept it there. We thought, you know what? Let it go in the money. Let's see what happens if we have to adjust it on the day of expiry when there's no extrinsic value left in it. So be it. We'll adjust one, same expiry. Maybe we'll strangle it out. We'll adjust another one, the last third, down and out. So we're not putting all our eggs into one basket, because it sucks. It sucks bad when you roll all your positions. You spend all this time and, oh my God, I rolled everything. Oh my God. And then it goes right back up and you didn't need to roll a damn thing. But you never know at the time, right? You never know. It always looks scary. So that's why we divvy it up. So it's hard to remain long in a market that's going down. We had to expect the correction. No, we had a nice bounce back up.
Also
who knows?
Sorry, also with saying, Shane, that we also bought puts. We had lots of puts cover in place already, because we never sell cover, but we bought more, and we had to sit there and actually just spend money for 3 days, and it feels painful because your theta's negative and you're spending more money and it's going to get worse, but you've got to protect your capital. If it means taking a few $100 loss on wasted puts, so be it. Pay it. And also we resisted really hard the temptation to keep rolling things into strangles, because we just kind of thought the market's just been at 72K and here it is now at 60. Could easily be, it got here in a day and a half or whatever it was, 2 days. It could easily get back to 70 in 2 days. And I don't want to have to be managing now 65K calls, which are now $5,000 in the money. And sure enough, what happened? FOMC was marginally dovish a bit, and market sprang back into life. So I'm really glad that we resisted that temptation.
Yeah, no, good point. And again, because we were bullish, we're scared to death of selling calls in a market that's going down, which is something we would normally do.
Yeah.
So it's just a little bit, it is a little bit uncomfortable. Well, let's face it. It's trading can be uncomfortable, and you got to get used to that. So
the main rate, there's one thing I want to say, and I said this to our paying members, and it's important, so I'll say it to you. The way to avoid discomfort and fear and all of those things is to keep your leverage low. You need to internalize this. It's really true. Bitcoin is a 70 to 80 vol asset. You don't need leverage with a 70 to 80 vol asset. You don't need any. That kind of vol, you can make a fortune with it if you just trade unleveraged, buy, sell, or sell 1 times your notional in your underlying in terms of notional in options. It's enough. You can make enough money. You don't have to cane it. I mean, we do on some of our accounts. We get punished for it, but you can get rich by just trading super low risk. Margin never going above 15% in normal markets, and under stress it goes up to 40. So what? No one's afraid, right?
As you can imagine, Richard was not a contributing writer to Get Rich or Die Try.
No, the book I want to write is I Died Rich.
Okay. All right. Hey, hey, and you know what? If you weren't in the market or you're light in the market, maybe you got out. I think it would have took balls of iron to short that up there, but I'm sure some people did. The market was really overextended, so it kind of made sense.
Can you imagine how you'd feel if you shorted it at 74 and got it right at that moment? You'd feel like a god, wouldn't you? It'd be insufferable.
Indeed. Indeed.
You'd then go on to make all kinds of terrible decisions, feeling vulnerable.
Yeah. So if you're new to the market, well, you might, if you think, hey, we could pull back in the 60s. I'm a huge fan of never committing everything at once. I never do that. Maybe scale in through the low 60s. Could we go back down and revisit the 50s or even a crazy move down to 45? Yeah, anything's possible. It's crypto. But, too many people.
I think now the FOMC's in with their, honestly, guys, we really are going to lower rates. They basically said that they're going to lower rates 4 times over the next 2 years. That's they've given the whole of Wall Street the red rag to a bull, isn't it? Go fill your boots.
Yeah, pretty much. Oh, I guess all I'm trying to say is, scale in. Don't use a lot of margin. Maybe look at if we dip down, maybe sell a risk reversal, or buy a risk reversal. You're selling the puts, do it as a spread. Use that money to buy some calls. Maybe scale in, get some futures. Just don't go crazy. I think we could be in this mid range for a little while, but it's crypto. You got to expect pullbacks. All right. I think we've done enough there. Let's go to a few questions. I know we've got a couple of questions coming up. And just before we get to questions, I will close the poll here. 81% of people think on this call think we're going to be at new highs by the end of March. I mean,
no, they're saying no.
Oh, sorry, you're right. No,
end of March.
Hang on.
Yeah, I think that's a reasonable call, right? I think it would be early for a bull rally right now.
It's funny. You know why I didn't read that right? Is because I was thinking in my brain that everybody would think yes, it would be, but
no, I think we've got a more savvy audience. I think new highs by end of March is there's only a week until the end of March.
Oh my gosh, yeah.
So
where did the month go? Yeah,
and end of April is possible, but even that maybe not, right?
I think we could be in for some sideways actions. That's why I'm happy to sell Iron Condors right now.
Given that we've had 3 days of outflows now from ETFs, I think all that's happening, to be honest, there is that people are selling their GBTC, and it's going to take a week for that money to recycle back into IBIT or whatever. So I think it's going to be all, oh no, the ETFs are all failing, everyone's drawing their money out, and then next week it's going to be, oh my god, everyone's buying ETFs, So.
And that's the way it goes with crypto. It's sort of that very typical lemming sort of a move. And when crypto's going down, everybody thinks it's going to zero. Get out now. It's all bullshit. When it's going up, it's like $1 million. It's going to $1 million. That's the way people are.
I've never traded anything which induces such hysteria, even in me.
All right, we have a question here. A couple questions here. First one from Core. What do you guys think about the new segregated PM engine on Deribit? Are there benefits regarding the older PM engine? Well, we've actually switched some, and we've kept some on the legacy.
Yeah,
I prefer the legacy right now, but what are your thoughts, Richard?
I'll show you one thing that's really good about the new one. These -4321 business, that they need to convert that back into percentages, because that's ridiculous. You can't even read you don't even know what that is. I think that's in like jumps of I don't know, fractions of the 15% or something like that, but they need to put the percentage numbers in.
Yeah, because it can't be standard deviations, I don't think, because the numbers
No, that would be way too. What's really brilliant about this system is they've added on what happens in super shock situations of plus 50, 100, 200, 500. That's good because it means that forces you to go and buy cover if you're short, and because you never want to see a massive red number over here. Great, I think that's good. And I think the same on the downside. So make sure you're covered on the tail risk puts. Fantastic. The number here is a minor annoyance, but doesn't really matter. You can kind of figure it out in your mind. -4 is roughly 15% down. The one massive failure on here, and if anyone's from Deribit's watching, is that what you took away was the single most useful feature of the previous portfolio margining system was it would show you what your margin will be after expiry tomorrow. And today it doesn't. And the new one doesn't do that. And that is such a massive loss. We need that. We use it every day. And so now we're in the dark. So if anyone from Deribit's watching, please put that back in. That's what I think about the new margin system. Otherwise it's the same as the old one, really. It produces more or less the same numbers. Who cares?
Yeah, it's when we were looking at one system versus the other, it was maybe 1% difference, or it wasn't a big difference. Question from Stan. How do you manage puts calls? Do you sell when price hits and simultaneously sell on another strike, or wait for some time and see the bounce?
Yes and yes. We fix a price target for the entire spread, and we'll often go and look on the combo market to see if we can get that spread on the combo market. At the moment, there is not enough liquidity. This is something that Deribit acknowledge and they're going to solve. But we have a look anyway, because if you can execute on the combo market, we only pay one fee for the two legs. So that's definitely worth having a look at. But at the moment, you can actually often get a better price by legging in, by trading the two outright separately. And what we'll do is we'll set up the orders for the two outrights at the price we want to pay. And if one gets filled, we'll just move the price on the other one to get it to slot it in and make sure it's done. Unless it's a really flat market and we are going to chance it, sometimes we'll do that. But if the market's moving, we just want to get the thing done.
Yep.
But
cool.
when Deribit have solved this combo markets liquidity business, we're definitely going to be using that a lot.
And for anyone interested, if you're on Deribit, on the top left under the strategy button, you'll see the combo market come up. Again, we haven't had a lot of luck because there's not a lot of liquidity there, but hopefully that'll get better soon. Last question here, and we're out of time. A question from Gene.
One second, Philip. If we can't bring you in because we don't have enough licenses to let you speak, but please do just type a question in the Q&A section and we'll answer it.
Good catch. Gene says, is there ways someone can do quantitative strategies in crypto options being retail only?
Yes, we do it. What's the real question here? Of course you can. There's an API. You can hook up whatever you want to the API. So Deribit doesn't have inbuilt robots that will do quantitative strategies for you. I'm sure that would give them all kinds of legal issues if they did, because then who's trading the account? And there's a whole issue of being advisory, which is a legal minefield. But you can hook up your computers to the API. You can write something in I use C++. People use Python, Rust, whatever. And there's loads of open source code out there already to hook up to the exchange, and you can do whatever quantitative strategy you like. I run one actually.
Okay. I think that's about it for today. We actually kept pretty close to our 30 minutes today, surprisingly. Hey, yeah, it's been a little bit of a rough ride for some people. I mean, if you've been riding Bitcoin since 30 or 40, it's no big deal. It's just you're just off your high water mark. Not a big deal. For some people who maybe got in a bit late, this pullback might have hurt a little bit. You know what? It's natural. It's part of the whole process. It had to happen.
If you're going to trade any asset, you've got to have a 4-year time horizon or better, right? You can't think I'm going to get rich this year and then go and live my paradise life. No, you're going to walk through shit for the next decade. That's the essence of being alive. It's not the victory, it's the fight that brings value to your life. But if you trade consistently and carefully over that time, and you keep your thesis straight, and you don't over leverage, you will end up super rich and happy that you did it.
Hang on, that's completely contrary to what that YouTuber with the Lambo said.
Yes, he's a dick.
All right, hey, good stuff. Hey, it's been a wild market. We expect things to calm down a little bit, and by calm down, I mean I kind of expect it to hold that 60 to 75K range for the next little while, and I'm happy to sell on each side of it.
It's a hell of a range, by the way.
It is a hell of a range.
If you're saying it's going to hold 60 to 75 range, what you're saying is it's going to shoot up and down by 15, 20%. Like a mad thing over the next.
No, I didn't say it was going to stay. I think it'll be confined in there. Whether it just goes from 60 to 67, I don't know. But I don't think it'll bust outside of there. Now, if we go to the top of that range, I'll be a bit careful. Maybe I'll buy some puts. Maybe if it goes to the bottom range, I'll probably buy some calls, or I'll do some risk reversals. I'll probably try to take a little bit of directional advantage, assuming it's going to deviate to the mean, revert to the mean, and kind of move back to the middle of the range, but we'll see.
I got a question. If it gets up to 75K fast, and that's then looking like a breakout, where's the next level?
There is no next level. It's just gonna go. Here's the thing: is because it's hard to say, because I think there might be a real liquidity, a real supply problem. If that big move happens, why did that happen? It's anyone's guess. The only thing we can do is if it shoots up to, let's say it shoots up to 100K, there's a big pullback. Well, I suppose 73, 75 would be the first area I'd look, for a pullback. That'd be a 25% pullback. But
so I think so that tells you, right, if you're going to be short calls, you probably want to make sure that you're also long, like a bunch of 100K calls. Lots of them at super low value. And I know it's wasted money, but still, if it gets up there, you won't feel like a waste.
Yeah, we do it all.
Vol will be 130, and those at the money with 1 day to run will be like 200 basis points per contract or more.
Yeah, we always have cover. We have long tail cover, and we'll often double cover because it's just we've seen it happen too many times. Crypto's its own animal. It's not the S&P. It's its own animal, and it will buck and try and throw you.
Yeah.
So that's my trading strategy going forward. Hey, we're out of time. Let's see what happens during this week. I expect we're going to see we're going to have something to talk about next Thursday. So until then, happy trading, everyone, and we'll see you next week. Hey, and thanks for watching this episode of Deribit Live. If you'd like to learn more, talk, and trade along with us, then check out roguetrader.academy, where we offer an incredibly unique educational and trading experience. There is no other service like this out there, period. Where else can you not only learn, but interact daily with professional, fun traders, with each of us having over 20 years of experience? And for those who just want to watch our daily live stream, you can do so via the links below. So if you want to peek behind the curtains and understand the strategies that we've developed since we started trading options in the 1990s and take your understanding and skills to the next level, then join now, and we'll see you on the inside.